Hello and welcome to the paid weekly recap for the week ending September 26, 2025. I'm Keith Harwood, CIO of Yellow Tunnel, and also pictured as Vlad Karpel, the CEO and founder of Yellow Tunnel and the creator of the artificial intelligence behind the predictive AI for dynamic market system. Before we get into the recap, normal disclosures. Options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. The information in this presentation is for education and information purposes only and should not be considered trade advice. And finally, myself and/or the team at Yellow Tunnel may have a financial interest in the securities presented in the trade ideas. If you do need more time with the disclosures, please go ahead and pause the video here. Otherwise, we'll get into the recap for the week. So the 10-year yield had gotten down to about 4% and has now bounced back to 4.2%. The prior range was 4.2 up to maybe 4.6, but really it had been trading in a range between 4.2 and 4.35 for a while. After we started to see a break at the beginning of September after non-farm payrolls, we are now testing that breakdown level of 4.2%. Interest rates are expected to be lowered by the Fed, but we've gotten some inputs that maybe put that into question at times. Non-farm payrolls are coming up this week, and that may solidify the rate cut schedule for at least September, if not through the end of the year. Or sorry, October, but if not through the end of the year. But in any case, the market right now had been trying to break out to a new high, and this week it was looking like we were going to just get into this bull trend. By the close of business on Monday, things were looking very good for the bull. But on Tuesday, we started to show a top and pull back. And on Wednesday, Powell made a comment that stocks look overvalued. And people that have been looking for that indication that overvalued stocks may have a need for a pullback jumped on that. All right, so between the Buffett Indicator, Powell's comments, things started to pull back a bit here. Core PCE on Friday seemed to help a little bit with a bounce back as inflation numbers came back in line. But at the end of the day, the non-farm payrolls number for this upcoming week may be the final trigger that's needed to get a bull market or potentially a bearish market. It's unclear if a bullish input or what the bullish input is. A weak non-farm payroll number solidifies the need to lower interest rates. A strong number may say that's a great sign that the economy is improving, but it may lower the urgency to lower interest rates. So right now, it's a bit unclear exactly how the market's going to react. And with that, I think we've got a little bit more chop ahead of us, unfortunately. The market was trying to stop playing with this chop where we continue to have rallies that are then dipped and then rally and then dip and then rally and now another dip. We had a longer period of rally in this scenario, but again, a dip. And now the 20-day moving average held, and we tried to test the lows from September 17th, and so far they've held. So each of these dips are getting bought, but at some point, maybe they won't be. Now, tech, very similar situation, tested September 17th lows, was looking very strong, dip, and then bounce back. Small caps have been a bit more bullish over this last few months or this last month. Shallower dips, a little bit more of a bullish trend looking, still catching up to the behavior and the moves that have happened for the S&P 500 in tech. But overall, small caps have looked better, but they did get a bigger dip as well and got below the 20-day moving average briefly, now trading right on the 10-day moving average. Looks like maybe this is going to start driving back to the highs as financials seem to be performing well, in particular the big financials, the Morgan Stanleys, Goldman Sachs, Citigroup, all looking like they're setting up a bullish trend. But at the end of the day, we need to see more buying to get the market back to a high after a dip. The VIX had been elevated going into this, and then on Friday started to fall. So VIX certainly took a lot of premium out of the options market on Friday as the dip once again was just a dip for now. So we continue to see this VIX start to elevate as people look to position with hedges. And then on Friday, the dip with the market bouncing back. People stop buying the puts or they start selling out some puts or they start reducing some of their hedges. And then as we get to highs, reposition into hedges. That just seems to be the normal flow right now. So for the next few weeks, perhaps that continues to be the normal flow, or perhaps the next time we break out, it gets that follow through that we thought that we may get after the last breakout to new highs that was going oh so smoothly until this week hit. Now along to the trades for this week. GE was one of those names that looked like it was just starting into a big bullish trend. About a week or so of really nice bullish action, and then started pulling back potentially on valuation concerns. I mean, at the end of the day, when we see these stocks that were getting 70 plus RSIs, especially big companies like GE, It's natural to be concerned about an overvalued market here for them. And so GE comes back down 2%. And unfortunately, because we're dealing with you know, options with a few weeks to expiration and slightly out of the money, this does generate a leveraged loss in this scenario with a 52% loss on the options. On top of that, that drop in the VIX actually reduces the premium further. So even with the slight bearish action, the implied volatility can still fall, as we saw in the broad market, and create a bigger loss than I think normal in these kind of market circumstances. Corning, GLW, very similar, has been on a longer term trend to the upside and actually held up okay on the Thursday and Friday dip. Ended up closing about unchanged for the week. All right, so from the Tuesday open until the Friday close, the stock was actually up 0.2%, 15 cents. But again, the implied volatility actually got hit very hard in Corning, particularly on Friday. So the option market sucked some premium out of the options, and that generated a 20% loss for these particular call options. So now we've got this situation where had the market continued higher, I think we would have been seeing some potential for some really big leveraged returns. But because we had the pullback driven by the action on Wednesday and Thursday, we did see a couple of losses this week. Now into next week, we actually don't have any expected trades, partially because of the dip, partially because of the uncertainty driven by the Fed and the non-farm payrolls data coming out on Friday. That said, we do have the trading room. We just crossed the $1 million mark for the trading room performance on a back test net gain. So you can see that there's still trades out there with a lot of value. A lot of what we've been seeing right now have actually been in put credit spreads being really good value add compounding returns. Now we generally in paid focus on the long call for a bit more leveraged return while still getting a good percentage of winners. In this current choppy market, the put credit spreads have been working really well for us. We've been talking through a lot of other ideas similar to that. Please join us Monday mornings, 9:50, or sorry, every morning from 9:15 till 10:15, 10:30 Eastern, and every afternoon from 3 to 4. Talk through market conditions, potential trade ideas, AI generated signals that may be more better suited for a credit spread or a calendar, earnings trades, etc. There's a lot out there. And if you have questions about an individual stock and you want some technical analysis, some options analysis on it, Vlad and I are happy to help you out with that. So feel free to join us there. And if you need to reach out separately, you can also email us. I'm Keith at yellowtunnel.com and Vlad is Vlad at yellowtunnel.com. Thanks again, everybody. And here's to a good week of trades. Thanks again.